Ladies and gentlemen, good day and welcome to ANI Integrated Services Q1 FY25 earnings conference call hosted by Kirin Advisors. As a reminder, all participants' lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Preeti Bharadwaj from Kirin Advisors. Thank you, and over to you, ma'am.
Good afternoon. Thank you. On behalf of Kirin Advisors, I welcome you all to the conference call of ANI Integrated Services Limited. From the management team, we have Naveen Korpe, Chairman and Managing Director, Mr. Praveen Pandit, AVP Finance. Over to you, sir.
Thank you. Good afternoon, everyone. I'm here, myself, Naveen Korpe, Managing Director and Chairman of ANI Integrated Services Limited. Along with me, our Executive Directors, Mr. Akshay Korpe, and our CFO, Mr. Kedar Korpe, is also there. Also, we have our Finance Head and AVP Finance, Mr. Praveen Pandit. Good afternoon once again. I would like to give a little introduction about the ANI Integrated. ANI Integrated Services Limited is one of the leading organizations specializing in technical staffing solutions for the organized sectors since our establishment in year 1989 and incorporation in 2008. We have been listed on National Stock Exchange under SME platform with over 35 years of experience. We provide industrial solutions across engineering projects, operation and maintenance and labor services. Based in India, we serve broad spectrum services including EPC firms, power plants, oil and gas, refineries, pharmaceutical and FMCG companies. Having completed over 300 plus projects, we maintain a vast network of 5,500 plus technical professionals, ensuring prompt and cost-effective services delivery tailored to our clients' needs. Our operations have also expanded internationally, allowing us to serve major clients as Larsen & Toubro, Tata Consultancy, Reliance Industries, Nestle, and many others. With a presence in 6 overseas markets, we have successfully executed numerous international projects, particularly in Middle East, Africa, Thailand, Saudi Arabia, and many other African and Middle East countries. We have earned several prestigious certifications that reflect our commitment for the safety and excellence. This includes the Best Safety Contractors of the Year award from the Reliance Industries Jamnagar. Also, there is another few multinational EPC companies like Technique, Toyo, and many other such customers are there from where we got various awards for the safety, quality, and best completion contractors. Our company operates through several key segments like manpower deputation, project, and operation maintenance. In the manpower deputation segment, we offer specialized services such as construction supervision, engineering, design deputation, project management services, manpower staffing, and pre-commissioning and commissioning services. Our esteemed clients in these segments include the Technique, France, L&T, Tata Consultancy, and many other EPC customers and end customers. In the Q1 of financial year 25, this segment contributed rupees 26.89 crore, represent 50.72% of the total revenue. Our another vertical is a project business which provide services like erection, installation, testing, commissioning. We have successfully executed the projects for leading customers like Technip, L&T, Toyo, IOCL, HPCL, Nestle, and many such customers are there, including Reliance, where we have done a good number of projects in this particular quarter. Which include the new refinery, upcoming refinery, which is coming up in the Rajasthan called HRRL. Also, we are working along with the IOCL Panipat for their expansions and Reliance Industries at Jamnagar for their new solar manufacturing plant. In the operation and maintenance segment, we offer services including day-to-day plant operation, maintenance, emergency breakdown, shutdown services, retrofitting, and many type of technical services which require for any type of running manufacturing plants. Which include we are providing these services to customers like US Vitamin, Mylan, 3M, Nestle, HPCL, Kane Energy, Reliance, and many others. Where we are providing the services for the cross-country pipeline for the customers like GAIL, HPCL, BPCL, and all. In the Q1 for FY25, the segment contributed 6.67 crore, represent about 12.57% of total revenue. Sorry. For the project business, the Q1 25, the segment contributed to 19.47 crore, accounting to 36.71% of the total revenue. In operation maintenance, our revenue is 6.67 crore, representing 12.57% of our total revenue. Our growth strategy focus on identifying emerging sectors, expanding our geographical reach, and strengthening our brand credibility by diversifying our services offerings and enhancing technological integration. We aim to stay ahead of industry trends, enter new market, and build lasting trust with our stakeholders, ensuring continued success in dynamic and competitive landscape. We are pleased to report a strong financial performance in Q1 FY25 across both the consolidated and standalone metrics. On consolidated basis, we have achieved total income of rupees 53.06 crore, marking a 28.76% year-over-year growth. Our EBITDA doubled to 2.88 crore, leading to enhanced EBITDA margin of 5.42. Net profit surged by 152.39% to 1.68 crore, with PAT margin improving by 155 basis points to 3.17%. Similarly, on standalone basis, we recommended a total income of 49.77 crore, up by 23.41% EBITDA, increased by 59.24 to 2.33 crore, resulting in an EBITDA margin of 4.68%. The standalone net profit also showed significant increase of 75.30% to 1.26 crore, with PAT margin rising to 2.53%. We are strategically aligned with the growing opportunities in infrastructure development, which are expected to boost demand for our core services in project management and technical staffing. Our strong Q1 for this financial year performance reflects our commitment to expansion, innovation, and delivering values. As we continue to identify emerging sectors, expand our reach, and build our brand, we remain poised for the continued success in the evolving market, especially with the support of the Union Budget for 24-25, focusing on infrastructure development, particularly in road and rail transport and urban development. Also, we are rapidly expanding our reach in the overseas market, mainly into Africa and Middle East. Recently, we have opened our own 100% subsidiary in Africa, Nigeria, and already we have one subsidiary in Dubai to serve mainly into Gulf and Middle East market. As we move forward, our dedication to innovation and operational excellence will remain, positioning us for continued leadership and success in the marketplace with the support of our stakeholders. We now open the floor for any question and answer. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Aman Swami from an Invest Analyst. Please go ahead.
Hello.
Yes. Yeah.
Thanks for the opportunity, sir, and congrats for a good set of numbers. My first question is on the seasonality of the business. So is it like the Q1 is going to be seasonally little lower as compared to other quarters? Is that understanding correct?
Yes, sir, you are very much correct. See, generally in our type of business, first quarter is always the lean period, which do not have much of the project. So most of the project getting completion deadlines are March for taking for the depreciation for the manufacturing plants and all. So first quarter is not that high compared to next 3 quarters. So first quarter will be always bit low than the next 3 quarters.
Understood, sir. Secondly, sir, what kind of project do we have right now, and what is the quantum of projects, and further, what is the revenue visibility for FY25 from these projects?
See, as far as total overall business, what we envisage for the FY25, total we will able to grow more than 20-25% around.
And what kind of margins do we expect?
Margin should be better margin compared to previous years.
Understood, sir.
Yeah, much better margin. Since this year, we are, if you study our consolidated and standalone both the balance sheets, our consolidated balance sheet looks to be more stronger since we have started increasing our footprint into overseas market more aggressively. So local business as well as the overseas business, both together, giving a good growth, and the bottom line also will expand quite good.
Got it, sir. Got it, sir. Thank you very much, sir, and all the best for the future.
Yeah. Thank you.
Thank you. The next question is from the line of Neena Deshpande from Swastika Advisors. Please go ahead.
Hello.
Hello.
Hello. May I ask you a question? Am I audible?
Yeah.
Okay. Sir, how have your cost management efforts influenced profitability, and what are your plans to maintain or improve margins?
Margins are going to improve definitely. If you study the last 6 or 8 quarters of our, the margins are growing quarter on quarter, as well as the top line also growing quarter on quarter. Overseas business margins are much better compared to domestic margins. That's the reason we are more expanding on the global market.
Okay.
Yeah.
My next question is, what is the planned capital expenditure for the remainder of FY25, and which areas will these investments focus upon?
Yeah. Basically, see, ma'am, we are into services business. So we are not into manufacturing. So services business don't require that huge type of capitals and all. We are into services, so we need to create a basic infrastructure and all. So capex is comparatively very low.
Okay, sir. Understood. If I have any more questions, I'll get into the queue again. Thank you for answering these questions.
Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Jayarajan from TSV Capital. Please go ahead.
Thank you for the opportunity and congratulations for the good numbers. My first question is, given that the company is now 5 years old, does the management has any anticipate in giving dividend payouts in the foreseeable futures?
Yes, good question. As far as the dividend, yes, we are very seriously thinking on that. Our main aim for the investor is to have the investor has to be wealth. Our investor wealth is very important for us, and definitely we are thinking on that. We are evaluating this option. Mainly, see, we are in the process of migrating to mainboard. That is the first target we have kept. And based on the Q1 26, that period we are hopefully planning to go ahead with the mainboard. And subject to NSE, BSE compliances and all. Hopefully we'll able to maintain that. We are on the track as of now. So what your question is about the dividend and all, seriously we are thinking on that. I can't make any firm commitment immediately now. Okay?
Okay, sir. Thank you. And my next question is can you provide any specific guidance for FY25?
For that, I can get you.
Sir, I mean revenue guidance, can you provide for FY25? FY25 or for the coming years, next 3 years?
The question is not clear. Can you?
Okay, sir, I will repeat my question again. Can you provide any... Am I audible now?
Yes.
Okay. So can you provide any specific revenue guidance for the upcoming years?
Revenue. Yeah. See, revenue, we will able to have the good growth for this financial year as well as for the next 3 financial years also. Since we are doing a good business, we are getting at least 80% business from the repeat customer. So basically, we have minimum at least 20% of the revenue growth will be there for this year as well as year on year coming. Is it okay, or you have any questions further?
No, sir. I got it. Thank you, sir.
Thank you.
Thank you. The next question is from the line of Tara from VY Capital Advisors. Please go ahead. Tara, your line has been unmuted. Please go ahead with your question. It seems like our current participant got disconnected. So we'll take our next question from the line of Aditi Roy, an individual investor. Please go ahead. Ms. Aditi, your line has been unmuted. Please go ahead with your question. Ms. Aditi, your line has been unmuted. Please go ahead with your question. Due to no response, we'll move on to the further participant, which is from the line of Sanjay Sharma from Unity Finances. Please go ahead. Hello, Ms. Sania, your line has been unmuted. Please go ahead with your question.
Good afternoon. Hello, am I audible?
Yes, ma'am.
So I wanted to know, how are you managing cash flows this fiscal year, and what are your expectations for cash generation moving forward?
Okay. Hello. Can you answer? Hello.
Hello. Yes, sir.
This is Praveen Pandit. Good afternoon. So basic concentration on the overseas business, because overseas business is giving the good margins, and that will take care of our working capital gap. So in domestic, for operation and deputation, it's always required 45 days working capital gap, because billing cycle and payout is 45 days. Whereas in project, it's take 60 to 90 days, because all invoices is on milestone basis. So we are concentrated on the overseas, and that will take care of our cash margin and cash flow.
Okay. So what are your primary growth strategies for next 2 to 3 years, especially given the strong start to financial year 25?
So it's, our CMD has already spelled out that 30% growth, and if you see the historical, it's almost 25 to 30% growth is there. So accordingly, we can maintain that strike rate.
Okay. Okay, thank you. I will get back in the queue if I have any more questions.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Hemant Bhatia from SG Securities. Please go ahead.
Hi, good afternoon.
Yeah, good afternoon.
Sir, your project division has been making losses for a very long time now. So what is the logic of continuing this division, as this division is eating the profits of the other 2 divisions?
See, the project division is not making the losses as such. Definitely the margins are comparatively less for certain period of the time. Because the project business is the duration of the projects are comparatively long. And initial phase of the period in the project where we have to pump the money. where the margins are not there. But lateral time of the project earning is there. So definitely the margins are there in the project as well. So it's not that the other verticals has to pump the money to the project division.
Okay. And as the previous participant asked, your working capital is actually very much stressed. So you need to work on that, I presume so.
Yeah, I got it. Yes.
I agree. At the time of IPO, you had guided for revenue of 500 crore in very short time. So what is the view on that now?
Yes, it is achievable, definitely achievable. In between, because of the phase of the corona, the initial plan got affected badly. We had a good presence in the Southeast Asia where the corona, because of the corona, future business got affected. But now after this phase, we are then refocused on the Africa as well as into Middle East. And both the places now we have our own subsidiaries there. And both places the business is started. And this year also already good orders are there in the pipeline for next 2-3 years. And expecting the very good growth in terms of margin as well as top line.
Okay. But I still feel that your project division, as the segment results, you are showing it negative. That's why I asked previously.
No, for particular period, definitely it may be showing negative because the initial phase of the project is no earning. You have to spending and billing is not happening. And once the project is took up at say 25-30% and all, then you actually start billing and getting the revenue. Up to that period, it shows negative margin.
Okay, sir. Thank you. Thank you so much.
Thank you so much.
Thank you. The next question is from the line of Niket Agarwal from Alacrity Securities Limited. Please go ahead.
Good afternoon, sir. Congratulations on your good number. So my question is that your working capital days are continuously increasing. Why is it so, sir?
Please speak loudly. Your voice is very low.
Sir, my question is that your working capital days are continuously increasing. Sir, why is it so?
Hello.
Sir, I am audible?
Yeah. So basically, we are investing some initial amount in the project segment because that billing and it will be happen after some break-even point. It takes 6 to 9 months. So initially, we required to invest in that project division. And even depreciation and operation, our payment cycle is 45 days, and our main cost is the salary payout to the employees. So definitely, it will require that working capital in initial period, but definitely at the closure of project, it will be improve on that working capital gap.
Okay, sir. Hello.
Yes.
Sir, my next question is that are you expecting any corporate actions like right issue for the shareholders for creating their wealth and utilization of your reserves for their further expansion?
We are thinking about the various options evaluating. So along with the migration to mainboard and all, there is different options we are evaluating. But as of now, I don't have the very specific answer to your query.
Okay, sir. Thank you, sir.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. The next question is from the line of Vinod Gupta, an individual investor. Please go ahead.
Hello.
Yeah.
Thank you, sir, giving me this opportunity. Sir, my question is, what specific factor leads to 134 increase in net profit And what do you expect this trend to continue?
Net profit, you would